Richard Fuscone operated at the apex of global finance. Armed with a Harvard MBA, he rose to become a high-level executive at Merrill Lynch. He acquired the standard markers of Wall Street success, moving into an 18,000-square-foot mansion with massive pools, elevators, and monthly costs exceeding average salaries. Meanwhile, Ronald Read spent 25 years fixing cars and pumping gas at a local service station in Vermont. Later in life, Read took a job sweeping floors as a part-time janitor. There was a sharp difference in prestige and income between his daily labor and an executive like Fuscone. Based on their backgrounds alone, an investment firm would bet on the Harvard MBA to build a fortune, while assuming the janitor would barely scrape by. During the 2008 financial crisis, the housing market collapsed and shattered Merrill Lynch's mortgage bond portfolio. Fuscone was ruined. A judge eventually forced him into personal bankruptcy, and his properties were sold off in foreclosure. 6 years later, Ronald Read passed away at the age of 92. When his will was read, his local library and hospital discovered the former janitor had quietly amassed an $8 million fortune. Wealth creation is a behavioral soft skill. Success is 80% behavior and only 20% head knowledge. Accumulating wealth requires taking calculated risks and maintaining a level of optimism. Fuscone used these aggressive traits to build his income. But keeping wealth requires humility, a healthy dose of fear, and a strict margin of safety. This chart highlights exactly where Fuscone failed. His high income grew steadily, but it was swallowed by a mountain of debt used to fund an ever-expanding lifestyle. He could not define how much was enough. Society pushes this through the man-in-the-car paradox. When you see a sleek sports car on the street, you admire the car and imagine yourself in it, but you rarely look at the driver. Buying expensive items creates the illusion of status, but it rarely commands actual respect. Unchecked ego destroys wealth faster than bad investments. High income without discipline is ultimately a liability. Ronald Read's actual investment strategy was remarkably boring. He bought blue-chip stocks and held them for decades without ever trading. This graph maps a linear growth line alongside an exponential curve over 50 years. We easily track the straight line, but struggle to grasp the bottom curve. The power of compounding materializes in the final stretch. It requires unbroken patience before suddenly exploding upward. Warren Buffett is the real-world proof of this math. 97% of his net worth was generated after his 65th birthday. In the game of investing, time is a far more reliable asset than pure intellect or attempting perfect market timing. Then there are tail events, the rare, extreme market crises that drive the vast majority of long-term financial returns. Look at the New York Stock Exchange during the 2020 COVID-19 crash. Market chaos triggered mass panic selling as portfolios lost value in days. A rational robot might try to trade through every dip and peak, but a reasonable human prioritizes mental peace to avoid making fear-based decisions. Investors who simply held their positions through the chaos ultimately watched their portfolios recover and thrive. Financial discipline reveals itself when everyone around you is panicking. The ability to do nothing while others sell determines long-term success. Being rich is highly visible. It's the cars, clothes, and mansions that signal to society that money has been spent. Being wealthy, on the other hand, is completely invisible. It is the money that was expressly not spent on luxury items. Spending money to show people how much money you have is the fastest way to have less of it. True wealth is an unexercised option. It is the psychological restraint of holding purchasing power in reserve. Curious, if wealth isn't meant for buying status, what is the point of accumulating it? Ultimately, money pays its highest dividend in the form of time autonomy, the absolute freedom to control your own daily schedule. An invisible safety net gives you the power to say no to a bad boss or a forced career path. You don't need a Harvard MBA to win this game. Waking up every morning knowing your time is your own is the ultimate dividend.